Before we begin, I do want to remind you there's a high degree of risk in trading. You've been trading for more than one day. You know that you can and will lose money trading. Only trade with money you can afford to lose. All right, let's take it away, Art.
Well, thank you, Dave, and thank you, everyone, for joining us. I'm a mechanical trader, as I'm sure you all know. I invented my first system in 1986, so it's now 40 years, just about this time of year, if memory serves me. I invented a bond system that took off right away and sort of fueled a sort of a stimulus response. So I had success. It made me want to, investigate more things for success, and that propelled me further. So conditioning, since today, though, despite years of lecturing, and I've been claiming forever that you cannot combine mechanical trading with judgmental trading without getting the worst of both worlds. I suppose that's going to remain true, although I've been obsessed with a way to actually trade around it. And so I'm saying two contradictory things, but I have to leave it at that. I cannot tell you that what I'm going to show you actually works, but I will hopefully impart why I think the theory is good enough or it has a good chance of working. So if I've had success in mechanical trading, why even go? Why go to this new cockamamie idea that I've been sort of obsessed with for years? Consistency. Okay. I'm going to show you some major consistency, and we'll throw out why it's a goal worth maybe shooting for and what the pitfalls of getting there actually are. All right, this is a 3-minute system. I call it the mega system. A mega system being a system that has many, many trades, eking out a small profit on every one of them, or not on every one of them, small profit off the many trades in aggregate. Like scalping. Scalping in the pit, I did pit trading for about a year. Uh, you're always willing to buy on the bid, the lower price, sell on the offer, the higher one. I traded in the muni bond contract. The bond contracts usually had a bid offer spread that were like adjacent to each other, 13 bid at 14. And these traders in the bond contract especially traded in channels that just went back and forth 2 ticks for interminable lengths of time. And you had to have some real stamina and some real, desire to achieve your goal in the face of just incredible boredom and an incredible strain on you. It's not taking your eyes off the trading boards, off the trading desks, whatever. What came out of that experience, which I could not make work for myself, was just a fascination with scalping. Okay, because again, nothing is more consistent than that. So I've spent the last 3 years on a very simple idea that I'm going to show you in a second here. And all the time was, the basic bedrock idea was there. Excuse me, there's going to be trade showing. I think I'm going to leave that on. Be helpful for you to see it. It will be interrupting me periodically. Um, but now I lost my train of thought because of that guy. Yeah, anyway, I want to impart to you how scalping is like the most consistent thing you can do, and what I've worked on here is the closest approximation to it I can come up with. All right, this is a system in S&Ps. It's trading on one contract in the mini S&P. That's the bigger one. This is a 20-year history, 2006 up through July of this year. Made $347,963 over that time. Again, a single contract. Just under 58,000 trades. Again, a small profit eked out over many, many trades. 67.5% were profitable. Here's your small profit. $6 is over and above an $11 slippage commission I built into the system, which reflects commission plus a 1 tick give up every other trade. I'm going to be fully transparent about how that is a concept. Much easier said than done. But again, let's look at the steps on why I'm so fascinated. $13,436 was your worst drawdown. 2,589% is the amount your account would have increased had you started out with your worst drawdown amount. Okay, this is what I was consistently shooting for, an equity graph that was pretty much a straight line from the bottom left of your chart to the top right with barely a ripple. And here's your consistency personified. Not a losing year in the batch. So this particular variety of trade is something that I was showing live in a trading room through the month of July. The little longer than that even, but the July was the final refinement thus far of the system. Trades in 3-minute bars, trades from 8:30 Central Time to your last order would be flashing at 11 o'clock. The orders always flash at the end of the 3-minute bar for entries and exits. And the last trade would be exited by no later than 11:30 a.m. Okay, there's one filter in there. We were dealing with smaller filters to prevent us from trading all day. And in this volatile environment, we were being sidelined constantly. So this particular variation I came up with allows you to trade any day that has a 150 point range on the day session or less. There's a $450 stop per trade. That's 9 points, 36 ticks, averages roughly 11 trades a session. Okay, now why is this not a mechanical system that you can automate and turn on and just go with? Because every one of the trades, prices, I should say, you're trying to buy and sell on limit orders. In the performance summary, one that is touched but not penetrated, like right here. Trying to buy on the low, in other words, is counted as filled in the performance summary. In actuality, this trade would likely have run away from you before you could do anything with it. Well, that's not entirely true. In this example, you probably would have gotten in on the second bar, but okay. There are examples. Let's pretend that you were buying here and you wouldn't have gotten filled. You had a decision at that time to, give up a few extra trade ticks to get in it, skip the trade entirely, whatever. Now, all of a sudden, you're not matching the model. Okay. Now, the 8:30 session open is our demarcation line. We are buying and selling on pullbacks, mean reversion type system, but we're always going in the direction of the major trend. Okay. The trend being where we are relative to the 8:30 open. So if we're above it, if the bar closes above it, our next bar can only tell us to buy. If the bar closes below the 8:30 price, tell us to sell short. Now, occasionally the actual price, the limit order we'll be putting up will be on the other side of the daily open. Relatively rare, but that's because it triggers off the close of the bar, not where the price would be. And it might have been easier for me to take that out, easier to explain if we took out the trades where it does cross the bar. But unfortunately, that made the aggregate profit considerably worse. So that's what this is all about, okay? Aggregate profits, all your wins, losses, put it in a giant hopper, and we just don't fight that result. Let me get back to this for a second. I wanted to show you one other thing. All right, where if you have to give up ticks in those circumstances, and you want to follow the model, you want it to be the day is over, the week, the month, the year, and you've managed to only give up one tick every other trade, it's the reason you're going to have to make up the trade somewhere else, gain back ticks somewhere else. I did this actually for about 6 months, I think. And I abandoned it because the overall system, even the model, was not working that well. And I wanted to move on to other stuff like what I'm doing here. But I did stay pretty close to that objective. Okay. And one of the ways I did that is because there's another rule on this particular version of the system. It says that if the bar closes 3 ticks or more against you, $37.50, then the most you're going for on the plus side is a 1 tick profit. Okay. See if we have an example of that somewhere. Yeah, should have had that set up. Let's just scroll a little bit here. All right, here's an example of that. Now, somewhere here, you might have made a decision that you're going to give up 5 ticks on a losing side, because at that point, all the trade can do. All right, I should have mentioned it's clearly closed more than 3 ticks against you here, right? So you have a decision. Maybe the day has had a lot of losing trades, a lot of profits that sort of got away from you or whatever, and you might think, I'll take a 5 tick loss here because the worst that will happen against the model is it will take a 1 tick profit. If it takes the 1 tick profit, then I'm another 6 ticks behind the model. But maybe it'll go all the way to the 9-point stop, 36 points. So that would be 36 points you'd be giving up minus, the 5 ticks or whatever else you abandon on the trade. So that was a place where I would pick up probably more often than not against the model. That's just one idea, and I'm really not good enough to tell you, the way to do it. I'm just pointing out a theoretical pathway. There are places where a savvy trader would probably do much better than, the rigid model. So that's basically my idea in a nutshell. It's a way to trade around a model that has, all the consistency of pit scalping. And that's about all I want to say by way of intro, Dave. You want to add something here?
Yeah, I got some slides here. I'm going to run through some stuff here with you guys. Let me share my screen. Oops. So those who don't know me, I'm Dave Mecklenburg. I've known Art, I guess, a little over 20 years here. So I've been trading just, let's say 22 years. I met Art in 2005 as I was starting to publish some content. And I did some editing of his parts of his book, Beating the Financial Futures Market, which was published in 2006. So my experience with Art's trading systems go back more than 20 years here. So when we ran this live trading room, I guess starting in June, and then this particular system in July, it was my chance to look at it, critique it. What do I think? So I have some thoughts. I didn't even share these with Art. This is more for a discussion. I'll run through some of this stuff. I already know that many of Art's answers to my thoughts or my points are going to be, well, you tested it already, but we'll see. We'll see, you know, what his thoughts are. So how can we get, I guess, better results on this? Again, I want to quickly review. This was the back-tested system. I highlighted the numbers here, the net profit. This is after slippage and commission. Again, about 2/3 of the trades profitable. Again, the net profit, $6 per trade after slippage and commission, essentially giving up a half tick every trade or a full tick every other trade. This is over 20 years. Something like this, probably what we most care about instead of the return on account, which in TradeStation is net profit divided by the account size or maximum drawdown, which is the account size required as well. That gets you your return on account. We probably care about the average net profit per trade here. Got to squeeze something out. This was the optimization chart that Art gave me. You're never going to get the exact numbers, by the way. I know we had $6 average trade on the TradeStation summary. Came out to $5.98 here on the optimization chart. But we went with a 450 for the stop. You can see all of the stops worked here. Again, I guess there's some trade-off here of how much do you make or what's the average trade and how much are you willing to lose on a stop. I guess would have maxed out the average trade here at a 750 stop, according to this optimization chart. And then, hey, what happened in July, the full month of July? So there was only one day that we didn't trade. I believe there was 23 trading days in July. One day did not trade because we had a 150-point move on July 29th. So no trading on July 30th. So this is, again, you can't always get the same numbers in TradeStation. If you're on a different machine, it's just a fact of life with TradeStation. But this is the results on Art's machine in which he traded the system live in July. So pretty much a wash, net profit here of only $443 trading on his machine. 312 trades. Again, 208 were winners. So again, pretty much 2/3 of the trades were winners. Now, just to show you, you can't always get the same results. I ran this code on my machine. I use a different version of TradeStation. Art still uses 9.5. I use 10. So it looks differently here. I got, again, close, but it's actually showing a little bit more money here, $1,100. So it's missing 5 trades. It was like 312 to 307. Interestingly, same number of winning trades. So it's missing 5 losing trades. Sometimes you can pick through and you can find what's wrong or different ticks, different data loads differently. I had to change some of the code because his code is coded to Central Time and I'm in Pacific Time, but I don't know where those errors are. So we're going to use Art's off his machine. And this was the daily kind of results here. couple bad days, couple good days. Again, pretty much a wash here.
By the way, Dave,
Uh,
August is unbroken profits on closed out days.
well, interestingly, the end of June was quite good too. But
Right.
whatever. We were just testing this out live. This was something, again, we started with a different system in June as well, that didn't trade after, was it 75 points, Art? And
That's
then we
right.
had to trade a different system. We had to trade I think, was it originally a 5-minute and switched to a 3-minute? But so we were going back and forth between systems, and then Art re-optimized, and this is the third system. So us doing this live and checking it out, helped come up with a finished system. Certainly those were some of the benefits of just like, let's just do this. Let's just go live. We'll see how it works. I'll get to watch it live. Maybe we'll get some feedback from people. Let's just go ahead and do this. So that's what this is what happened in July, if you were there for all of it. So again, we'll just do I have some thoughts. Again, I think a lot of Art's going to tell me, well, he looked at that and there was nothing there. But these are things I thought of. If you guys have thoughts or ways to get better results, let us know. But what I wanted to show you is, here's a chart. This is off my machine. Shouldn't really matter here. So these are some trades going on, and I'll let you know what these arrows are. So the blue arrows show two examples of it hit the exact tick. So whether or not we would have been filled, I don't know on this. Right? I already kind of discussed that. Are you going to get filled? You're going to get filled.
Well,
Entry and exit.
that second short you see there, if
Uh,
you just left the trade, the
sure.
automated out,
It
you would
would
have
have come
been.
back and filled you on the second one. But
But that's hard to do because it would have run away without you on bar number one there.
so, oops. I actually built this chart uh, for the yellow and blue ones. I mean, sorry, yellow and red arrows. But then there were two examples here of catching the high or low tick here. Hey, and on these, like maybe you don't get filled. Okay, runs away, no big deal. Obviously, in the second example, it would have came back and filled you on the next bar, but also exiting. And now, if you use limit orders in TradeStation and automation, there's actually something very simple built in that can change a limit order to a market order after X seconds. And so there kind of is an automated solution to that if you're doing limit orders. But again, we'll discuss other ways of doing this. But what I wanted to show you here, that's catching a high tick. But why I did this chart is, the yellow arrows show you the fill, basically, right? We were going band to band, line to line here, and we're below the days. This red line at the top here is the opening price. So we're only shorting in this case. So these are all shorts. I mean, we're going to short at the yellow, cover at the purple. So the yellow arrows show the fill on the purple line, but then the red arrows actually show how much further that price moved through that line. So, a couple points here. I didn't leave the price on this, but it's moving a couple points, and this third one moved a lot to the entry. It's like, well, how can we capture? Is there some way we can capture this? Obviously, if you're putting limit orders out there, you're never going to capture it. The limit order is at the band. So, if it touches your line, either on the entry or exit, you can automate to change that to a market order, but it's always going to fill at less than that limit order. So is there a way we can make it up? Is there a way we can make it up by capturing some of this extra move? Is my first thoughts on watching this for a full month. So, again, I don't know if you worked on this type of stuff, Art. I said, well, could you move the band out 1 or 2 ticks here, right? So you back test one system, but the system you automate has an adjustment in it.
Yes, I looked at all kinds of variations on moving 1 tick out, 2 ticks, moving them in, everything. Go back to what the page before this, though. Sort of jog something here. One thing you could say is move them out sometimes, like we see here, that the channels are lowering as we go into this exit bar. Maybe moving them out when the channels move with you, something like that is possible. All right, just throwing stuff out. Go ahead, I'm sorry.
All right. Yeah, and I was specifically looking at the target one, not both of them necessarily. Like, you just,
You
because
could do
what I care about
one
is
side.
making up at the target. Look, both my examples of touching the line and whether you got filled were actually the entry. And what I kind of most care about is the exit here. And can I make up that extra tick here? Is there a way you can make up that loss?
And one of the things you can't test for is obviously, were you filled at your price? Did you miss the trade? I mean, in theory, you can just, if you give up, if you go to a market order and you've given up 2 ticks getting in the trade, you're always free to take your profit 2 ticks beyond where the model says to take it.
I'd also say, like, again, I watched this and like some of these price moves so quickly and these fills come so fast sometimes that I don't like not automating this. Like, I don't even know how you could really trade it. I mean, you could, I guess, but a new bar would print and then boom, it would magically trigger the trade. So it's tough. Like, I think you really do want to automate this, and whether or not there are some solutions. Again, if you can just squeeze out get that half tick back, like that's what we're looking at here. Is that you kind of, and by the way, this is, all these numbers are one contract. You would likely, if you're scalping, you're likely doing multiple contracts. But if you could somehow go from, $6 per trade to $11 per trade, and trading 2 contracts, now you've really got something that
You can do an array too of prices. Set up, 4 windows and insist on one of the windows that it has to be your price. Another window becomes a market order after 1 second, another one after 2 seconds, things like that. Just
yeah, like I say,
sort of
that's easy to do in TradeStation. Like, that's already set up to change, limit orders to market orders in strategy automation. But then there's more complex things you can do, apparently. And these are things, even though Art and I have been using TradeStation for decades now, even we don't know is the thing. So as I delve into this, how do you get filled? There's a way to do a market if touched. If it touched your line, then you can also delay, right? So let's just say, like, those quick little moves that move through that band, an extra point. Maybe they generally do it in 2 seconds. I don't know if it's a quick move, but you could do a market if touched order, touches that line, and then set off the market order, whatever, 2 seconds, 6 seconds afterwards, and whether or not that's a simple way of getting you a fill. So I looked into this. I mean, obviously there's a way of putting this code into your system. So there's all these advanced things here. I also thought about, normally your systems, or a lot of systems, you close the trade, at the close of the bar, or really the open of the next bar, close on the next bar. And I figured you might have tested this, but I don't know if you did or not. It touches the bar and you stay into the trade, into the end of the bar. Did you do that, Art?
I have tested that, but yeah, there's could do, again, the first thing that occurs to me is do that sometimes if something else is happening, but not
Sure.
all the time, something like that.
Okay.
I am taking down all these suggestions, by the way.
So, you could go through TradeStation here, and there's a list of advanced order modifiers. And again, this is kind of delving into how to really get the most out of TradeStation and automating stuff. And, and so there are advanced order modifiers. You could kind of just use ChatGPT or Gemini to kind of go through some of them. But I'm just letting you know they exist. But unfortunately, neither Art or I know how to use these things again. And it's all about kind of squeezing it out. Or when do you do this? When can you try to get those extra ticks so that you can match or surpass the back tested model. And then, hey, if any of you guys have some ideas, you let us know. You can put that in the questions there, something that we can investigate. I don't know if any people here have been scalping or trying to scalp or doing automated trading. I don't know if any of you guys actually use TradeStation or what you use to automate these orders. Kind of feel like TradeStation, was built for things like this, and it probably is the right tool, but maybe there's other tools out there we should be looking at. And then the other thing, my kind of big thought too, was about yours. And you addressed this, the take profit at one tick. And I'm not sure I love your rule or how you implement this rule, though you just said you thought you got better results with it. And I'm sure that's the case, but there's probably other ways of doing this. Essentially, if one bar closed, it was at least 3 ticks against you, then
That
you
was
move
an
on to,
improvement over our original 1 tick against you.
okay. Yeah, and I'm not sure, like I say, if if price is 3 cent and 3 ticks, below the entry, I'm not sure that's time to dump the trade. Like there's other ways to do it, or my thoughts on this. Again, you can crap on it. You could say you tested it, you don't think it will work, but and so I do have 2 examples here that I pulled where we had take 1 tick profit rule here. And then that's the yellow arrow, but arrow, and then on the red arrow though, it actually went and hit the target though on that bar anyways. So I was just thinking about money management type things, and I actually think probably the best way of maybe improving some results is having better money management and stop management on this. And these are some of my ideas on that. I think adding a break-even stop when you hit somewhere like 40 to 60% to the target, somewhere in that range.
That's we've seen some paper profits just evaporate and turn into losses. It does get frustrating.
Mm-hmm. And so, I mean, I think adding that break-even stop, or even better, or the break-even +1 or +2, could help. It's likely to help is my experience. I always use break-even stops or break-even +1 stops trading. I like step stops too. So, move that stop once we've, hit another criteria. So having a step stop of maybe 50% profit target when we get 80, 90% to the target. For within 1 or 2 points on the E-minis, maybe that's a good time to move your stop to 50%. My experience, good chance we squeeze out a few extra bucks with a step stop. Instead of using that it's 3 ticks against you, at least 3 ticks against you takes profit at 1 tick. I was actually just thinking, well, how far did it move against you is the thing. If price went 60 to 90% to a full stop, you were using 450 as the stop here. So, hey, if it went whatever, 300 to 350 or something against you, then that's when the 1 tick profit or a break even type stop comes in. That if it went so far against you, is it likely to hit the target at that point? You're 400 in the hole. Is it going to turn around and get you $400 of profit? So again, I was thinking maybe have better results or a better money management if you took that 1 tick profit when that trade went against you. And again, if you guys got any other ideas, let us know. Any other types of stops, money management you guys are using, welcome to let us know. Any thoughts on this, Art?
Interesting suggestions. I'm never happier than when I'm in TradeStation tooling around with ideas, so I'll be looking at those.
Mm-hmm.
And I like to think of this as a work in progress that everybody in the room is part of. Let's exchange ideas here and see if we can come up with something. That again, the objective is consistency. That's if it weren't for that, it wouldn't be worth shooting at, because you can still do fine on mechanical systems. Although I have to say, in all honesty, that they're making it harder and harder to make money on mechanical systems too. So you got that going.
Mm-hmm.
It's very frustrating when we had our June system and we had to keep shutting down. We are in volatile times now. So we can't be thinking those as the anomalies anymore. Volatility seems to be with us for a while anyway.
So I guess some things that Art and I are going to work on here, simulate some stuff, probably not in a live trading room, or maybe an occasional live trading room, or at most maybe once a week type of thing. Certainly not for a full month. But so again, I like to look at those stops and money management rules. We can see if we can squeeze out a few extra bucks on that. See if we can't learn all these advanced order modifiers that help us squeeze out extra money, particularly at the targets. I think we probably want to see if, this isn't a one-size-fits-all scalping system that Art created. It was for the S&P minis, but
well, that's a nice dream too. But the only other market I've seen in the futures where you get at least a theoretical profit would be the U.S. bonds, 30-year bonds. But that's got its own problems. Again, that's a range-bound market. Like high percentage of trading days are like 1 tick, 2 tick up and back.
Uh-huh.
But in theory, you can
Well,
enter on those levels if you can just.
yeah, like I say, it's not, you can't just, I can't just drop this into
No,
other
shouldn't.
futures. You want high volume, obviously, or any other futures, other high volume future contracts. There's only so many that I think are going to probably work for something like this. Maybe, again, the rules have to change based on the ticks and the ranges and whatnot, but maybe oil, maybe gold. I don't know, maybe some currencies. And so there was big news, trading news in June 4th. The pattern day trader rule was ended. This is probably the type of thing. I mentioned it to Art. He had no idea what he was talking about. And that sounds exactly like Art to me. He never traded stocks. He had no idea what the pattern day trader rule was. But that rule goes back, I think, 25 years, where all these day traders who were trading in the 90s and then got wiped out, they instituted a pattern day trader rule. Actually applied to options too, but if you were a pattern day trader, meaning you took 4 day trades in a 5-day period, you had to have a minimum $25,000 in your account. And so they actually ended that rule on June 4th. So you no longer need to open an account with $30,000 to do stocks. And so this may actually work on some stocks. I think some high volume, medium price stocks. Basically, it can't be too low of a price because there's not enough range. But maybe 15 to 60 bucks or so, $65. Certainly at least 3 million, maybe even 10 million. Basically, the point is you need stocks that have one tick spreads. So the higher the price, high price stocks don't have one tick spreads, and really low price stocks don't have enough range. But certainly some stocks probably
Yeah, I
ideal for
started
this.
looking at that. There is some hope in that, and if we can find something, wow, what a gargantuan field that would be.
Right.
So,
So, I would probably mention, I'm not sure, AT&T is usually one of those stocks that is in the right range and high volume, but maybe it doesn't actually move enough. But certainly AT&T, Verizon, banking stocks, Bank of America probably be on the list. I think Wells Fargo is a little high price right now, but yeah, some of these mature industries of telecom and banking, maybe some pharmaceuticals would be ideal stocks to see if we get that to work. So those were all my thoughts on this. Let us know if you have any thoughts here, any questions. And again, oh, and if you did not join us in July, I did actually record everything. We recorded all the sessions, and it's on the Art Collins trading YouTube in there. And Art, do you want to share your screen or
okay.
put up your trade station? People could see that, and when you do that, I will grab the link for the YouTube, so you can look at that. I think all of the sessions are up there. I might have pulled down one session.
Am I sharing right now?
No, you have to hit share your screen.
Okay. You see it
Okay.
now, right?
Yeah,
Okay.
I do.
Right.
And
Want
so
to take a
again,
look at the day here?
right. So again, your system last entry is
Flashes at 11 o'clock.
11 o'clock
Okay, so we
Central Time.
had a
So
break-even day,
we're already past
basically.
that.
Again, August has been so far so good. No point crowing though, like you said, because then you get this. It's the aggregate. It's all of the trades thrown into a hopper over time.
All right, I put that link to the YouTube channel too. So I think we had every day. So obviously there was no trade on July 30th because the 29th was more than 150 points. Let me see if I have every day up there. 26. Okay, so I was missing one day here. Oh, that's right. There was a holiday on the 3rd, so there were 22. So I'm missing. I don't have the 2nd up there, and then there was no trade on the 3rd. But there's a full month if you want to go through that. Put it at double speed if you wanted to watch that or how that goes. All right. Any last questions? I think we answered all your questions along the way here. Any more questions or thoughts, comments? I know everyone wants to figure out a scalping system so they can just print money 1 or 2 hours a day and then go live at the beach. And Art and I have been doing this for 2 to 4 decades, and it just plain old doesn't work that way. But I think we're on the cusp of having something here. So
Yeah, it
do some
comes
more
down
work.
to everybody has a stride they can find, in theory, I would think. Individual for everybody.
You know, I had one other thought here too, and I had mentioned this to you perhaps earlier in the week here too, because this is a mean reversion system here. We got some bands. Your system won't trade the first 2 bars, so the first entry would be perhaps 6 minutes into the session. You know, what I had been trading on the futures, and a lot of this came out of Art's research, even 20 years ago, was kind of capturing that momentum move. That there's some wide-ranging days. You can just look at daily bars on anything. You can see there's big bars where it started in one direction and went in that direction the whole day. And you know, at this point, those are those are $2,000 and $3,000 days on one contract. If you can catch that move, or you got a 50% chance of being right on that. And so that's what I had been trading. Again, you're looking to determine the trend early in the day as possible. So you're entering within the first 15 minutes and just holding to the close. Like that's the whole system. But if there's some way to kind of integrate that, you know, look for that trending day first, and then once that trend ends, we go into a momentum or a mean reversion type system. Probably the simplest solution is simply take that momentum trade on a different contract on the Russell or NASDAQ, and then trade your reversion to mean on the ES. But I don't know if there was a way to do that, or take that momentum trade and stick with it until we as long as we can, if it's one of those days. All right, looks like we're out of stuff. Any last comments here, Art?
Nope. Just we're gonna just forge on, and if you're in this room, you're an enthusiast also, I would imagine. So just watch for announcements and whatever, right, Dave?
Yep, and we'll have more stuff, certainly more lessons as we're figuring stuff out here. So I don't know. So like I said, there's not going to be a regular live trading room here. But you know, hopefully we can have lessons here weekly or every other week on something here. So that's all we got. Thanks for joining us. Again, I'll process this video, upload it for you. You should be able to watch it in an hour or two. All right. Thanks, guys.
Thanks, guys.